checking in those bags, shopping when we land. Big FN bag of ballin'. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Hey, what's going on, guys? Welcome back to another trading video. Today I'm gonna be actually talking about statistics and giving you guys a quick statistical lecture on why you don't need some golden strategy, golden nugget in terms of trading strategy that has a 90% win rate at 1-to-1, for example, or something crazy like an 80% win rate at 1-to-5 risk reward to become a millionaire or make a ton of money in the market. All it really takes is, first off, compounding and consistency and time. These three things also are very relational to each other. Okay, they're very proportional to each other, and I'm going to show you guys that real quick with this simulation here that essentially shows how those factors play a part and work together into building a very big trading system. So typically most traders, I'm just going to go based on what most traders have that are profitable. I would assume they would have a 70% win rate at 1-to-1. I think that's solid enough for 1-to-1. Me personally, if I was trading a 1-to-1 system, I would prefer something that's 75% or higher to give myself enough wiggle room. Otherwise, I'm gonna trade my high risk reward trading systems just because they give me a better edge in terms of my equity curve and my expected value, which is going to be discussed in a whole different video. So let's say you are a day trader with $1,000 starting, which is very small account size to some people. It might be big for others. Just depends where you are financially in the world as well. But I'm just going to take an assumption of 1,000 personal account. This is not prop firm, by the way, guys. Personal account. And I'm specifically stating personal because that's extremely important to make people understand this is a personal account. Okay, so you're not restricted by certain drawdowns or rules. Now let's say total months. Let's start with 12 months, and I'm gonna show you guys how compounding truly works from a mathematical standpoint. And this does become a reality if you're following your trading system and edge each and every single day in the market and letting the numbers of large numbers literally play out. So 70% win rate at 1-to-1 is it's an alright system. It's not the best system, but we'll take it. Average number of trades per month. This is extremely interesting because there's swing traders, day traders, and scalpers. Scalpers can take up to 20 trades a day, 10 to 20 trades a day. Day traders like intraday, like me, I'll say I'm a day trader because my winners are around 30 minutes on average duration, really. Losers, the hit style is pretty fast, so I can get in and out of the market very quick. Well, let's just say you are someone that is a day trader like me. So for me, since I also trade multiple pairs in assets, I will have higher trade frequency. My trade frequency from the past 4 months has roughly been about 5 trades a day. So if you do the math, in a month, that is about 100 because roughly 20 active trading days. So 100 trades per month. Now keep in mind, this has to do with trade frequency, which is what I'm talking about. Trade frequency, time, which is total months, and technically if you multiply these two, it just equals trade frequency. But obviously, you're not going to take 1,000 trades in a month, so that's why time is also another factor, and being consistent with that, with a good working strategy. So a strategy that has solid expected value returns with compounding. And this is what the calc does. If you can read all this if you want, if you're interested in understanding it better, but this is a compounding calculator. Now let's start with risk percent per trade. Since this is a personal, you could risk a bit more, but let's just go with 1% and see how we do, shall we? 1% in 1 year, you will go from 1K to about 87K in a single year if you're truly following this system of a solid edge with about 100 trades per month, which a lot of people actually won't hit realistically. I would just feel like a lot of people, they will average probably 2 trades per day if they're intraday trading, maybe 3. So it might be 40 to 60, which you will see it makes a very big difference, right? 1K to 6K instead of what 100 was, which is a lot more, right? And link to website is obviously at the top, so you guys can just paste it in if you want, or ask in the comments and I'll just give it to you. But I'm sure you guys can type it fast enough than asking me and waiting for me to respond. But this really shows the power of compounding and consistency, and this is real in trading. Now the only thing this doesn't factor in is emotions, meaning not the times when you're not following your trading plan, right? This is going to be factoring in that. So let's say you don't follow your trading plan always. Maybe put a 65% win rate instead of your back-tested win rate because you're accounting for potential emotional mistakes. This also doesn't factor in spreading commissions, which do add up a lot over time depending on how you're trading, whether you're trading options, futures, forex, whatever. That is all directly related to your broker, but typically it should not make that major of a difference, especially after all this compounding. Well, let's say 100 trades per month, 12 months, you will have on a personal 1K to 84K. Now, this is why I preach consistency and learning a skill over money, because with the skill, you'll be able to turn. I wouldn't even say this is flipping. This is not flipping account. And the reason why is when people say flipping account, they're risking a big percent of the account, maybe like 20% per trade, with a very big risk of ruin, meaning it's very possible for them to blow the account very fast because they're risking such big percent. Like if you risk 20% per trade, you can see, obviously, you're not going to get this number, first of all. Preface this is not legit. You're not going to get this number because way before you hit this number, you will face liquidity issues, okay? Well, look at this. Maximum drawdown of 85%. Essentially, you'll blow the account, okay? Essentially, you will blow the account, okay? So that's why things like this will be called flipping account, and we don't do that. We are real traders managing our risk, and this is good drawdown. 6% drawdown is very good. Now you can see if you double your risk percent, compounding works exponentially. So you can see how max drawdown increased a little bit. So let's do it one more time. Increased a little bit from 2% versus 1%, right? 1% is a lot less, and 2% is obviously almost double drawdown. Well, obviously the gains are much bigger. But keep in mind, as your account grows to 6 figures, I'd say, you're going to be risking 1%. That would be about 1K per trade. Can you manage that emotionally? If you can't, then you will understand that you need to size back down, or as many other things you need to do before you even try compounding that, right? Because also there's liquidity issues. I would assume you face liquidity issues. I personally haven't faced that, but I'll assume you'll be facing liquidity issues around maybe 8 figures, 9 figures. Not entirely sure yet, but I know definitely a huge number. You will be facing some sort of liquidity issues in terms of how long it takes to fill your orders, as well as your risk reward is going to be skewed a bit more because you're not going to be filled entirely at the price you want at. That's the advantage you have as a small account. But later on, as it grows bigger, you will face those issues of execution times, and then obviously pay more commissions, things like that, right? Unfortunately. But let's just go with 1% per trade because I think that's very realistic to compound account. Because let's say your account's at $1 million. 1% is 10K already. A lot of people are not going to be able to emotionally handle that. So no need to risk 2% on $1 million account, okay? Let's do this for 24 months. You will have about 7 million if you can truly keep these stats up. Now, this is if you truly follow these. Now, the reason why a lot of traders don't get to this level is because they can't follow their system for that long of a period of time. They get to a point where they start risking more, over leveraging, things like this, which is this stunting their equity curve. They just don't realize it until it's too late where they blow the account or something occurs. That's why you hear a lot of people that grow these accounts very fast. They also end the account very fast, right? Unless they're taking withdrawals slowly, that's a better idea. Well, they're flipping these accounts and losing them immediately. So would not recommend that. If you are a truly real trader, you would take this approach that I'm talking to you right now about, keeping it consistent. Let's be more realistic here. An intraday trader, let's say you're taking 2 trades a day. I'll give it that. Because 2 trades a day, you can get 2 probably really high quality setups a day. Okay. Again, this all depends. These numbers are just something I made up based on a standardized, roughly estimate of what I think a solid profit trader could be. But obviously, everyone's numbers will be different depending on how you trade, as well as the number of trades. There's so many other things that factor into this calculation. But let's say you only take 40 trades a month. You can see obviously with that trade frequency, 35K versus 7 mil is a very big difference because of the law of not large numbers. You can see it's a very big difference in how many trades you're taking. But as your account grows bigger and bigger, the exponential curve for compounding is going bigger, right? So let's say 40 trades a month. I think this would be a little bit more realistic for a lot of people. Do this for 3 years. Where are we now? 200K. 3 years. All right. And don't forget, your initial investment is only 1K. Okay, if you're putting in 10K in the beginning, obviously it'll grow much faster, 2 mil. But I'm gonna put in something a lot more realistic, I guess, of people to starting out to understand that hard work over a long period of time will pay off. Okay, so 60 months, about 5 years, which a lot of people also don't make it. Okay, a lot of people a lot of people have a very hard time training consistently for 5 years. But you see, you end up at some point at around 6 mil. Okay, let's say I'll keep this number at 40 because I do believe that 40 is probably more realistic for most traders than 5 trades a day. And don't forget, these are not random trades. These are trades within your predefined setup you're taking with a 70% win rate at 1-to-1 risk reward here. You're not taking 5 random trades. You're taking 5 random trades with no statistical edge. You're in a bloated account, okay? Let's say let's say you risk 2% per trade and you want to do for 2 months. You can see you hit about, or 2 years, you hit about a mil in 2 years of truly compounding the account, right? Also, your drawdown is gonna be a little worse, right? Worse percentage situation, you're still at about 200K, which is a great return from only 1K. That's basically it for this video. I really do hope you guys take a lot out of this video, understanding how probabilities and how numbers work, because that's extremely important when it comes to trading. You need to understand how these two things play together, and it doesn't take someone a genius to understand these statistics. I really hope like these statistical numbers are very easy for you, because there's way more difficult things that institutions and banks calculate. They do their own different machine learning models and do their statistical analysis, different types of models for their statistical edge that we obviously are not needing necessarily at the moment to do, because their equity position size is not at the point where we need to factor in other things that they need to factor in. They also need to factor in so many other things like investor capital, and especially if you're trading like a private hedge fund, that's way different as well. So there's so many other things they need to go through before they enter a trade versus us. So that's why I'm talking about just these very basic statistical edge that all you need to do is math. It's a very basic math here. So as long as you graduate from high school, you don't even need college. I do believe this is the way. Okay, compound your personal account. If you don't have this amount of money, get some payouts from prop firms, put it in a personal, lowly risk it and grow it, and follow your training plan, and you will become a millionaire or even more over a period of time, over a lot of trades, following your plan with a proven system and edge. That's it from me. I hope you guys did enjoy this. There's also a free Discord server down below if you guys are interested in joining.